Hey everybody, test one, two, test one, two. Todd, hey Todd, Jen, VJ, Vijaya, can you guys hear? I think so. Oh, good. Thanks, Todd. All right, welcome everybody. Let's give it just a couple more minutes in case there's some people running a few minutes late. It's just turning 8 o'clock now, so we have right now about I guess about 8 or 10 people in the audience, maybe. Well, maybe down a little bit, but anyway, I have Frank with me. Todd, my friend in the audience, Todd knows who Frank is. Frank is a senior member of the Discord that we trade in every day. And Todd, who's a member in the Discord as well, he's in the audience. He happens to be watching and viewing from his home. And he likes to participate in these type of events too and learn and ask questions and participate and share. So do have some attendees that are part of our network and some obviously that are not. So by all means, get everybody save your questions if you want. We're going to have a couple of breaks in the middle. After a few slides each, we're going to have questions, and then we'll go through more slides and then more question time. So if you have questions, write them down, and don't worry, you're going to get a chance to ask questions, get your answers if you have any. Before we get going, Jin, what type of trader are you? Jin, are you an options trader, a stock trader? And BJ, you as well. What type of a trader are you? Stock, options, futures? Yeah, feel free to answer those if you want or not. It's up to you. You don't have to. I'm just curious because there are so many different ways to trade the markets. You can be a premium seller like we are predominantly. You can be a buyer of calls and puts. You can be buying stock and selling covered calls. I mean, there's so many different ways to trade the markets. It's just nice. There's so many varieties. It's nice to just share what we each kind of individually do. All right, so VJ says options and long-term investing. Good. Okay, good. So you have a long-term account maybe, or a section of your account that's longer term, and then you have some options to maybe make some cash flow, pay things off that you want to pay off sooner, or whatever the case is. Sometimes earnings trades. Okay, great. So that's good. You have a little exposure to earnings trades. Great. And we're going to be talking about not just earnings trades, in and of themselves, but the theory behind why earnings trades should be traded. There's a lot of traders or people out there who are in our business who say don't trade earnings. I would never trade earnings because that's too risky and stuff. But we're going to talk about that too because everyone can have their own opinion. That's fine, and some people will stay with that opinion their whole life, and that's fine too. But if you look at things from the way that they're presented tonight, might help you see things in a different light. That's all. Because we've been doing it successfully now. I'm doing it successfully a long time, but within our Discord, this is going on our second year now, and Frank's been with me most of that time, and Frank can attest, and he'll speak on this, I'm sure. And if Todd gets a chance to maybe come on later on and speak, he's been with us maybe 7 months by now, I'm thinking, Todd, and Todd will give his personal experience or reference, let's say, from what he's seen just doing our earnings trades. And this is just our earnings trades. We do a multitude of different types of trades. We trade pretty much every strategy that you can imagine. And while some of them sound, difficult, scary, complicated, they're really not. Once you get, exposure to them, you really can pick it up pretty quickly, I think. And if there's any questions, we always get you on the right track in the Discord. But by all means, earnings trades are there every quarter, and by shying away from them, I think that people are losing out on opportunities to add income into their bottom line, for the end of the year. All right, let's get started. It's about 8:04. So in case anyone's out there who maybe never get a chance to, let's say, see any of my YouTube videos until now or meet me, whatever, I'm Uzi, my first name's Jim. I'm trading 28 years now, 27. I'm going on my 28th year, 27 years full time, stocks, options, futures in the last about 10 years, full time. So this is how I pay my bills. It's how I've paid all my bills for the last, like I said, almost 3 decades now, and it's been a wild ride because the markets are never the same each and every day. And then if you look back throughout the years, we've had a lot of different things that we've had to deal with. From, let's see, I started in '98 full time, right in about 2000. Well, we had 2001. We had the event in 9/11, so we had the Twin Towers go down, which was huge. We had the markets closed, I believe it was 10 days. And then when they reopened, it was a huge, ugly mess because obviously the world was in a state of fear, and the markets don't like fear. So the market, before it opened up, we all knew it was going to be nasty. And I don't remember how many percentages down we were, but the markets didn't even open up for about 10 days, 11 days. When they did, it was ugly. I was stuck in an airline stock, believe it or not. I was, back then I was buying and holding certain stocks. And one thing you didn't want to own back then was an airline stock. And I lost about 75% of my investment in that, because as soon as the stock opened up, I said, let me just get out of this thing. And the stock is no longer in business anyway, but it was a weird, scary time. So there was that. Then we switched over from fractions to decimals. So some of you out there are probably trading, in the last however many years you've learned and been trading with decimals, right? That means, 0.01. I learned to trade with fractions. I think Frank did too. And Frank's going to speak about himself in a moment, but we learned how to trade when it was fractions. So then there was a learning curve when we switched from fractions over to decimals. So in essence, basically, we learned how to trade, like, let's say, speaking one language, and then they flick a switch at the New York Stock Exchange, and we now speak a different language, but you got to learn it quick, otherwise you sink. So that went through that. Then we had the financial crisis in 2008, but we also had the housing crisis in about 2006 or 7. We had the flash crash, I think was 2011 or 13. We had the bear market of 2018, I think it was. Then we had COVID of 2020, the bear market 2022. Last year we had the August sell-off. This year the April sell-off. So we're still trading and we still are making money. So it's just you have to be able to ride the rough spots. And to do that, you really have to be on top of your management game when it comes to your trading and investing. So we're not really going to get into that too much. That's a whole nother topic, and that could take hours. But I just want to give you a little history about myself. So, I'm trading, like I said, stocks, options, and futures. I specialize in earnings trades. I remove most of the risk. There's never no risk, right? Even if and we're going to talk about that too. Even if you own a blue chip company, you might wake up one morning, and because they had a bad overnight event in some other part of the world, your position, if you're invested or if you're holding calls or whatever you might be holding, can get cut in half overnight, and it wasn't even your fault, but you had no idea it was coming, right? What we do with earnings trades is we know they're coming, right? So it's not like you don't see that Mack truck running down the road at 100 miles an hour. You know it's coming, and you can prepare for that. When you're sleeping and you wake up and Boeing had a door flew off a plane while it was flying, there's no way you can get around that in the morning. The stock's going to be down a pretty big percentage. So I don't want to get too far ahead of myself, but just a couple of tidbits here and there. I want to let Frank introduce himself, and he's going to help moderate some questions. If you have any questions, he's going to get to you. He's going to be there in case I stutter and stumble, because I do that sometimes. So kick me back on track. And I might have an interruption. I have 5 cats. Todd has a couple, so he knows what I'm talking about. So if a cat walks in my way and just connects my computer, Frank will take over for a little while till I get back online. Okay. All right. So with that, let Frank say hello, and then we'll get started.
Good evening, everybody. I guess I'll give a little bit of history from myself. I actually got started back in 1979, 1980. So I'm an old timer. I guess the most memorable thing that I can remember from those days is the crash in October of 1987. I can vividly still picture in my mind the stocks tumbling and falling faster than I could keep track of what was going on that day. And I have never, my heart was beating so hard at the time. I can still remember the feelings that I had and the sensations I was going through. And I guess like most everybody else that was in the market that day, it was a scary experience. But also lived through all of the events, the Black Swan events that Uzi talked about a few minutes ago. They happen, and you need to be prepared for those. And the good news there is Uzi's on your side when you're on, participating in this group. So it's very worthwhile. I think in talking to a lot of the people who participate on a daily basis, it's a great group, and they really have a lot of things that they can share from a knowledge perspective that helps everybody involved, no matter how long you've been trading. There's always something else or something new that you can learn from others. So I'm happy to help in any way I can. I'm on the channel, the Discord every day, just about every trading day. And I try to participate in as many extracurricular events that Jim holds as I can. So Jim, back to you.
Thanks, Frank. Yeah, definitely. All those who are definitely some things you've lived through. And while I was alive in '87, for sure, I do remember the crash. I wasn't actively trading, but I remember it. And then that'll stay ingrained in your brain for your whole life, because of the that the magnitude of that, given the time in the world we were living in '87. I forget where the Dow was, or the S&P and the Nasdaq was, but it wasn't high, and it dropped. What did it drop? 30%, I believe, overnight. It was huge.
It was huge. It was huge compared to anything else. I mean, the only other comparison that I can think of is 1929.
Right. Yes, and then after that we had the Great Depression. So
yeah.
So yeah, I mean, big market sell-offs can put you basically out of business for sure, or rattle your nerves, or make you a fortune. Fortunes are won and lost in those type of events. So while they're not fun and scary when we're going through them, if you're prepared and you're not over leveraged, meaning you're not like up to the tilt, your titties with positions, and you have no free cash, as long as you're not in that situation, you can generally take advantage of them by getting things you wanted to get in at a lower price. But anyway, let's get moving on, so I don't rattle you all night with just mumbo jumbo. Thank you again for attending. Let's get started. The goal tonight is to share with you all a proven method to take advantage of trade setups for earnings, trade setups using earnings as the catalyst. Now, this year, starting in January alone, from January to now, the methods that we use have returned 89 winners out of 90 trades, and the majority of them were about 100% winners. And I'm going to go through some of that with you soon. But the only one trade that wasn't a winner is still open, and I'll go through that in a little while. And so it's not as if we even had that one loss. We haven't closed it yet. We're getting close to being able to close it, either for a small profit, a break even, and put it to rest. Now, the methods that we're going to talk about has taken me basically my whole career to come up with, to find the sweet spot on how to use them and when to use them. Now, there are people out there who trade earnings, right? I don't want to call them gamblers, but there are people that trade earnings, but they're gambling. They come into it with the mindset is that they're going to take an approach. I'm going to buy this stock, or I'm going to buy this call. I think it's going to go up, this stock, on earnings. That's just a gamble, right? We have no knowledge of where a stock is going to go on their earnings report. Matter of fact, if you gave someone the earnings report the night before, you still might be wrong on where the stock's going to actually move, because it's all about how the market interprets what's in that report. We might think it's a great earnings report, but if there's something that an analyst or two analysts don't like, or the market expected something differently, then you could get the earnings report a day, 2 weeks prior, and really not know which way the stock is going to go. So the only way to trade earnings, in my opinion, is from a non-directional standpoint, and that's what we do 99.9% of the time. We might have a slight skew. We might have a, our trade might be set up so that if it goes this way, that'll benefit us better. But we're basically taking both sides neutral, meaning we don't care where it goes, just don't go here and don't go there. All right, does that make sense to you new guys? We're going to move on. Just think about that, and if you have any questions about that, we'll come back to that. Again, I want to go through some things. I've read all the books there are really, but the most important thing, I'll read this and then I'll tell you what I'm thinking. I began trading, stocks and options in the mid 90s. I went full time in 98, and I've read over 100 books on trading. And while that form of education isn't really foundationally necessary, it's nice, but the best and true expertise is gained through actually just placing the trades, managing those trades, and then obviously closing those trades and documenting what happened, good, bad, ugly, what you could have done better, what you could have done worse. That's how I've come up with these methods. So it's been a long time, incoming that, that they've been kind of like fine tuned. So that's why we can get 89 out of 90 trades that do well.
A lot of it has to do with managing those trades that don't go 100% your way, and
exactly
how to best get out of those trades with a gain, with a winner rather than a loser.
100%, Frank. Thanks for pointing that out, because while I am going to go through about 3 trades with everybody, not all the trades go the same. They're not all like, whistle and Dixie as the trade is going on. Some of them require rolling up the sleeves, getting your hands dirty, and then working that trade, because if you're a trader, you know that there's no nice, easy walk in the park. It could be a sunny day in the park when you're walking, and then the rain comes. So when you're a trader, you got to be able to manage that position in that trade. And so, I'm going to go through one that didn't go so well in the beginning and how it ended. Now, I want to ask the audience, so if you woke up one day, or just look at this chart, would you happen to think that, this fall from here to here, or in this fall from here to here, or this fall from here to here was earnings related? I mean, it looks like, hey, man, they had bad earnings here, right? Or maybe over here they had bad earnings. But this is a chart of United Healthcare, and this is nothing to do with earnings. What this has to do with is, if you look in the lower left-hand corner, it has everything to do with, in 2025, they cut their earnings forecast, and they reported higher than expected healthcare utilization costs, especially within the Medicare Advantage plans. Or actually, they were having a problem with Medicare Advantage plans, and I think the government was scrutinizing them. So all of these falls, maybe this one was earnings. These two, though, had nothing to do with earnings. So you can see that you could be asleep, or you could wake up one morning and this bad news hits the stock. It goes from $600 down to $485. Or over here, it goes from $375 down to $280. So again, nothing to do with earnings. Now, this is a chart of CrowdStrike. Again, this drop, huge drop from maybe 380 down to, let's say, 260-ish, nothing to do with earnings. If you look in the lower left-hand corner, the reason for this fall was a faulty software update in their what's called Falcon Sensor product. I remember this like it was yesterday, because we woke up proud. This was when CrowdStrike was everybody's darling. And then boom, bad news, stock drops out of the sky. So if you're making an investment long-term in this stock and you're in the 350, 380 range, you just lost 30% of your money right there. And while, a stock like this should probably come back, there's no guarantee. And one more, Hims and Hers. This is another name that everybody loved to trade, and they were looking to take business away from Lilly, Novo Nordisk, everybody that is in this business of making GLP-1 and Ozempic and the fat loss medicines, right? Also, Hims and Hers, deals with men's testosterone levels and women's issues too. And here's a fall from grace from 65 down to 40. And the news on this, if you look right here, was because Novo Nordisk, which was doing business with them, I believe, they decided that they wanted to break up with them for some reason. Again, the details don't matter, but this was news related that had to do nothing with earnings. So if you ask me, I believe that this is the worst type of thing that can happen to you waking up and not, or even if it happens in intraday, you're building a position, or you're in a stock. Maybe you sold some puts, maybe you bought some calls. You like the way the stock is looking, the prospects for it, and then bad news comes out, and you're screwed. And not only are you screwed, but this is the time, if you're a premium seller, that you want to be selling. You want to be selling premium when it falls like this, because now the implied volatility, which we're going to get into too in a moment, has skyrocketed. So you may have bought calls here, or maybe even sold premium here, but the IV was low here because there's no fear factor. When there's no fear factor, implied volatility is generally low. The minute you have fear kick in, you've got implied volatility skyrockets. This is when you can sell premium and bring in a lot of fun, a good amount of money for selling whatever delta you'd like to sell. Let's just call it a 15 delta. If you sold a 15 delta here, you may have taken in, let's say, $50. You go and sell a 15 delta here, you're taking in maybe $100, maybe $120, because the fear levels have elevated the implied volatility. So what we do when we get into earnings trades is we are able to do these trades when implied volatility is high. So let's get into some stuff. So I think, I don't know, maybe I didn't illustrate it well enough, but if I did, it's pretty fair to say, and you'd probably agree, that earnings trades are really not any more dangerous than owning a stock or a leap or a call, based on the things I just mentioned. Now, these are some of the trades year to date, and I'm just going to go over them quickly. You don't need to, you can copy this if you want, but there's no need to, let's say, focus on any one trade. I just want to show you that, from the beginning of the year, basically in February, when the earnings season started, then here are some of the premium captures that we were able to make. So you see a lot of 100%. You see some 30s, some 20s, some 40s. And it just runs the gamut. But a lot of these are where we're able to keep 100% of what we sold. Not all, but some of the trades, a lot of these were 100%, let's say, keepers of the premium, which is what we look to do if we can. But given the way that we're seeing, let's say, assignments lately, I think we'll probably be closing a lot more of these trades just to get the risk off the table from getting assigned in case price changes, after the market's closed. But these are some of the numbers going back from the beginning of the year. Now, I want to share this with you. This is one of the accounts I trade, which does the earnings. And from January until this time now, this account has earned 34%. And as you can see, it's killing the Russell, the S&P, the NASDAQ, and the Dow. All right, the rate of return here is up in blue, and here are all the indices. So earnings trades have the ability, not only on top of the regular trading I do, but to actually pad and add extra premium profits into the account every year. All right, now, so you might be thinking, well, hang on, you might trade 3-4 times a day, let's say, and so you're saying, how come you only did 90 trades since the beginning of this year with our earnings? And the reason is very simple, because we're so scrupulous in the process of selecting the actual trades, that if it doesn't pass the test, and I'll go through what I look for it to even become a trade, it has to pass certain tests along the way. If it doesn't pass the test, we're not going to do a trade on it, because, again, we're trying to remove as much risk as possible. We can gamble if we want, but that's not what we do. So we look for only high probability, high win trades. So that's, if you only get 90 trades and 89 of them win, I think you'll see the math will work out that that's really all you need. You don't need 100, 200, 300 trades. Less is more sometimes. Quality over quantity. All right, so one of the secrets, and I've kind of mentioned it before, to successfully trading earnings lies in what's called the implied volatility crush. Okay, now, what does that mean? Well, when stocks are about to announce their earnings, because there is that uncertainty, are their earnings going to be good, or are they going to be bad, or are they going to be neutral? The market makers do what's called an implied volatility expansion. So it makes their options a lot more expensive if you want to buy them, right? But for us, it makes them a lot more expensive for us for what we're going to be bringing in by selling them. So for us, it's good because we're selling our options predominantly. Again, we're predominantly premium sellers. So when they raise the implied volatility, that's like gravy for us, because what we want to do is we want to be selling in elevated implied volatility times. We don't want to be selling when implied volatility is low. Now, to make a living, yes, in the Discord, we sell premium even when the VIX is low. And what the VIX is a measure of implied volatility on the overall S&P 500. But we mitigate that by some of the ways we do it. But we're looking to bring in money for a living, right? So we can't just wait for always having the highest implied volatility when we're doing our regular trades. But by all means, for earnings trades, we're selling pretty much at the highest implied volatility in that expiration cycle of let's say the couple of weeks beforehand and then a couple of weeks after the event, I should say. So let's define what implied volatility really is. And this is a definition from Grok. So implied volatility, IV, is a measure of the market's expectation of a stock's future price fluctuation, even if it's only a day. It's still the future, derived from the prices in its options. It reflects the anticipated volatility of the stock over the life of that option, expressed as an annualized percentage. Higher IV indicates greater expected price swings, often driven by upcoming events like earnings, or in the case of United Healthcare, like I mentioned before, a news event of a CEO resignation or a suspended financial outlook. So that's what the implied volatility definition is. We don't really doesn't really need to know that. We just need to know we sell high implied volatility for earnings, and that's really one of the biggest secrets of the trade. Now, what we're doing by selling that is because right after the earnings are released, the market makers know where the stock is going. Sometimes they help send it where it's going to go. So they begin to now suck a lot of that implied volatility out. So if we sold an option, let's say at $150 or $120 on Monday night, and the earnings come out Tuesday morning, a lot of that implied volatility is gone within the first hour or two of the following morning. So just from the volatility crush alone, our option that we sold for, let's say 100, let's call it 100, might be worth 80. Is provided that there wasn't an extreme move against where we are sitting on the upper or the lower end of things. If there's no major challenge to our strikes that we sold, then we can expect probably a quick 20% profit no matter what. And then if it gets challenged, well, then we let theta, which is the time value erosion on what we sold, to finish the job for us. And we're going to get into that too. And if you have any questions on that, we'll be stopping in a few seconds, so don't worry. Now, we trade options instead of stock because it allows us to take a position without really using a lot of capital, okay? Calls and puts and derivatives of that, meaning strategies that use calls and puts, they don't use as much buying power as actual stock a lot of times, whether you wanted to go short or long. So it's a more efficient use of an account, whether you have a $5,000 account or a $500,000 account or a $5 million account. We have, in our group, we have everybody starting from 5 all the way up to millions. So, don't think trading earnings is or premium selling is just for the people with 6-figure accounts. It's not. Granted, you can't take all of the trades, but if someone is in the group and they'd really love to take part in, let's say, a trade, and they can't do the trade that we're doing, all you have to do is DM me, direct message me, and I usually will set up a private trade for them that'll help them to take part in the trade, but use and work within the constraints of their account. Okay, and Frank is a good example of this. Frank is a very risk-averse trader. So some of the trades that we take, while they're not risky, they might use up a big chunk of buying power. And Frank likes to day trade sometimes. He's a very active trader, so he likes to keep watch of his capital. So he'll take a trade that I've done and he'll modify it like I'm suggesting I'll do with someone that needs help with their account. Maybe it's a small account, but Frank will modify it. So instead of it using, let's just say, $3,000 in buying power, it'll use $500 in buying power. Right, Frank?
Absolutely.
Yeah, Frank's a master at that because he's a very watchful keeper of his funds.
That's the way you are when you're in retirement.
Well, it's also the way you do it when when you want to make what you have extend, and that's just a smart way to do it.
Yep.
All right, we're going to stop for questions in a moment. But one of the first things I look for when I'm putting together my scans for a stock earnings is I want to make sure, like I said, I want to make sure that the implied volatility is somewhat high. And I'll also want to see that the implied volatility percentile is elevated. Now, some brokerages will call this IV rank, whatever you want to call it, IV rank, IV percentile. Supposedly they're the same thing. I don't really know for sure. I don't really waste my time worrying about that or not. But I look for anything above 30, let's say here. And then in the implied volatility and the market maker move. This, by the way, this is Thinkorswim, a screenshot from Thinkorswim on Netflix a while back. And it's showing an $84 expected move, okay, with an implied volatility of 98. Now, I want you to notice something. 98% implied volatility compared to the following weeks. Look how much elevated that is. It's over double, right? So an average week is 49, 44, 41, and the implied volatility is 98. So for some of you new out there who are watching this presentation, you can see that we're selling high implied volatility like I was describing, a couple of moments ago. And this is just another way of looking at the market maker move. Sometimes I look at this one. This one on Thinkorswim gives me a look at. So this was the actual day of the earnings, and it said it's going to move. It has the potential to move maybe $79 either up or down. Okay, and then one prior was probably a couple of days earlier. I took the screenshot in preparation for this presentation. The implied volatility over here was showing an $84 move. So either way, it's an elevated move on implied volatility that's juiced. All right. Any questions as my cat starts to get in my way? Any audience questions? Frank, anything I may have left out? Any questions you may have? Todd, any questions?
No, I think that you've covered it very well, Jim.
Appreciate that, Frank. VJ, who else was in the audience? Jen, any questions? Okay, thanks, Todd. Appreciate that. All right, let's go. Let's take a look at one of the trades. The first one is on CoreWeave. The strategy we used was a put 112 triangle. Now, some of these things I've given it my own name because it's a combination of a couple of trades. Don't let this scare you, though. You may have said, oh, forget it. I'm already lost. I'll never be able to do this. Don't let the terms scare you. It's just a combination of calls and puts. It's basically if you can do Lego blocks or you can do a crossword puzzle, you can do option strategies. It's just a matter of learning it step by step by step. It's not hard. But it's a call to put 112. What does that mean? We're going to be buying one put. We're going to be selling a put. And then we're going to be selling another two puts. So it's just a combination of puts. And then what makes it a strangle is we add a call on the other end of things. So we're selling something high, and then we're selling some stuff, some position, some puts low, and we're doing a strangle on it. So what a strangle means, think about if you're going to strangle yourself or you strangle your leg. You're going to grab your leg with both hands. You're going to have it from one side and the other side. So we've got positions above and put positions below. Simple. Now, I'm not going to go through everything that I go through when I go through a strategy scan because it'll just take up the whole night. But here are the top 5 things in this particular setup that I looked at and why it mattered. Number one, and by the way, this is the day leading up to earnings. So right here, you see this big red candle. That was the day of earnings. But leading up to that, this was when we put the trade on right here on this green candle. So what was going on that day? Well, number one, we had price gaining momentum running upward, okay, with a rising MACD down below here. We had, it was at the midpoint. So price, number two, price was at the midpoint, okay, of its move from down low up to basically where it had come from up high. So we're basically right back in the middle of where it was and where it went falling down to. If you're not a technical trader, this one might not you might not understand. But number three is the price was closed outside of what's called the Bollinger Bands. Now, the Bollinger Bands were developed by a guy named John Bollinger back in the 90s. And what he basically states is this: 95% of the time, price will stay in between his branded Bollinger Bands. And that's what this upper red line is and this lower red line is. And if you notice, if you just look at the previous history, we have hit price action. Price goes up to the top of this top red line, falls back down to basically the lower red line. Then it comes back up to the upper red line, lower red line. So 95% of the time, he's right. It kind of stays within those boundaries. Okay. So, but what we had on this day when we were placing this trade, price was above the Bollinger Band. So in my mind, according to the Bollinger theory, price should retrace back to somewhere down to a lower Bollinger Band, which it did wind up doing. But we have to put a trade on, right? So let's keep moving. Now, the price was also above the 50-day simple moving average, which is this yellow dotted line. Now, why does that matter? Well, a lot of hedge funds and a lot of money managers, they watch the 50-day moving average, the 100-day moving average, the 200-day moving average. And when a stock closes above the 50-day moving average, sometimes that will give them the signal to get in. And they don't even sometimes care about earnings because, again, they might be just a 50-day moving average trader in or out. If it's below it, they're out. If it's above it, they're in. But I kept that in mind that it did close above the 50 as it was getting to their earnings. So very strong price movement. Now, there were no upper gaps or lower gaps I needed to worry about. Now, if you're not familiar with what a gap is, a price gap is an area on the chart where price closed one day and then opened up way above or way below, and that gap is left open. Now, let me just bring your eyes over here for a second. Here is a gap. As you can see, the price closed here and then opened up here. But we didn't have to worry about that. Why? Because price already fell back down and closed that gap. Now, had there been a gap, let's say up here, that would have been a concern, and it may have altered how we either did this trade or if we even did this trade at all. But there were no gaps that I needed to worry about. Okay. If you look at this note here, I had previous resistance to help out in this case, in case price decided to move up. This would be an area of previous resistance of a pivot. Okay. If price fell from here, I noted that I had a double pivot right here. These two areas of on this trend line was a fairly strong recent trend line. And it also coincided with something I like to follow, which is the Fibonacci's. Now, again, if you're not familiar with technicals, Fibonacci's were developed by a guy named Fibonacci back in, I believe it was 1200 or something. And that's a whole other conversation, but I use that in my trading. And this trend line, look what it lined up exactly with, the 0.618 Fibonacci retracement level. So if price was to fall, I felt fairly comfortable that it might at least find support there. Now we can see that it didn't, but it did stop there. And this was the area that we were able to get out of it. Okay. But the bottom line is that it did fall. It fell right to it and came right back above it within a day or two. So this was a very key inflection point, and it wound up doing all this, but that doesn't matter because by then we were already out. All right. So here's the actual alert that went out to our members. So this is how they're all written out like this. They're very easy to see. You can see it's a new trade alert. It's for earnings, the symbol, the strategy, the date that you're going to be using for expiration, what the trade actually is. I mentioned earlier that we bought a put and we sold a put. So we bought it at 127, we sold at 126, and then we sold 299 puts. And you could see that we had a big different distance between the ones that we bought and the ones that we sold. And what does that mean? That means we were selling. This was the meat of the trade. The meat of the trade is what we sell. So we were selling price that was well below where price was during, right before the earnings trade. And if price fell, though, we were going to be able to take advantage of the fall by selling something very close to the strike price that the price was already at. And then we added that naked call up top, like I said. So you can see what range we had. We had $99 on the low end, and we had $220 on the high end. So we basically had a huge strangle. on the low and on the upper end. Now we took in $105. Now remember that figure, $105 we took in, okay? Everything gets a risk assessment. This was a 5 level. This was the highest level that there is, and that's because we had a naked call. Anytime you have a naked call on earnings, I give it a 5. And that doesn't mean you can't do the trade. You shouldn't do the trade, that you are going to use, just stay up all night and lose sleep over it. Just that, be aware, it's a higher risk trade, and I'm prepared to manage it if we have to, if the price goes against us. But for all intents and purposes, just know it's the highest risk level there is. That's it. Doesn't get any harder, any more riskier than this. Yeah, sure, Raj, I could do that. Thanks for letting me know, Frank. But so anyway, what I want to go over is this, though, really important. We took in $105, but we also have what's called an embedded put debit spread within this trade. So we could make an extra $100 if price moves with a certain to the downside with us in this part of the trade. So we actually have the potential to make an extra $100, which makes this a potential $205 for this trade. And I always recommend, hey, size accordingly to your account. If you have $1 million account, do 10 contracts. Do what you want. If you have a smaller account, hey, please do one contract. If it's right and it works, you're going to make good money. It's one trade. You don't have to make your whole year in one trade. And I do know what the potential is that you can make that extra $100 if price does fall. Now, at the bottom, you'll always see my trade confirmation, which means I'm in every trade with you. As Frank and Todd will tell you, I'm in every trade with you because that's how I do run my business. I'm trading for a living, so I'm in these trades. I might do 10 contracts, but I always show you one contract because this is what I recommend. I recommend doing one. You size it according to you, but this is how it should look on your end, so you can say, hey, what does this trade look like on, when you're trying to put this order in? This is what it should look like on your end, and you should see that you're bringing in $1.05. All right. Now, the next day, well, actually, here's where I show you now where the positions are. So we sold the naked call up here at 220, which was well outside of this highest level within range. So we had plenty of room to the upside that we didn't have to worry about. We bought this area here in green. This was where we bought that put debit spread. So if price falls, we were going to be able to make money in the meat of the move here. And then we sold those extra 2 puts down here, which was the other part of the meat of the trade. This was where we generated a lot of the premium. And going into the actual scenario of what happened, price did fall. As you can see, price did fall here. So what we did was we sold the 127, 126 put debit spread. We took in an extra $55. Remember, we said we could make an extra $100, but you don't always make an extra 100. In this case, we made an extra 55. And the cost, though, of that put debit spread, let me go back. I don't know if you can see it, but you can see what we actually paid for it. So I believe here it is. We paid $477 for this 127. We received $454 for the 126. So what we made on this trade, we brought in 55 extra dollars. And what CoreWeave wound up doing, and I don't know if you remember this trade, Todd, or Frank, but this trade did dangle. It teased us because it was above 100, it was below 100, it was above 97, it was 98, but the stock wound up closing above our strike of 99, so we didn't even have to close that 99 put. So this portion of it expired worthless for whoever bought it from us because we sold it. All right, that was a tremendous trade because we made money on the initial premium we took in. We made money by selling that put debit spread portion of it, which is the beauty of this type of a trade. Like this was a picture perfect trade. And then the puts, we didn't even have to close them. We just let them expire. Yeah,
hey,
remember a while when Frank, remember?
Jim, Vijay asked a question about determining which strategy you're using. Could you say a couple of words about why you chose to use the 112 strategy here?
Yeah, great question. Great question, BJ. And that's another thing I wanted to actually say. So when we're looking at the chart, which is here, I don't go into this trade saying I want to do a put 112 strangle on this trade. Let's just do it, right? By going through all of these key factors here, plus others that I'm going to talk about in a moment, BJ. That's how I determined that I wanted to use the put 112. The reason was this. Price was running up huge, right? Leading up to this particular pivot, something, I don't know what the reason was here, but it made it do basically a V turnaround, and then it caught itself and was bouncing. So I did believe that this could go either direction. But in my mind's eye, because of the time, that's another thing. CoreWeave didn't have a lot of trading under their belt yet. It's still an IPO this year. And this trade was done, I believe, in July or August. So there wasn't a lot of trading history on this thing. So I wanted to be a little bit leery in case it got sold off. Okay. Now, there could have been another type of trade I could have done, and it's called the Batman trade, where I would have done the same exact thing I did on the downside, but on the upside. Okay. But the reason I didn't do that is because that would have had 2 calls involved, and I didn't want to expose any extra risk to the upside. Because if the earnings were great, this thing could have really broken this pivot. It might not have challenged our 220, which was up here, but it might have challenged here and made the Batman trade a little bit more difficult to manage. Than it would have been just one naked call. But great question. And as we, if let's say you were in the Discord and you asked that question, I'd be happy. I happily answer, why we went through this trade versus another trade. But that's a great question because I don't use the same strategy on every trade, as you'll see. The setup basically dictates the type of trade. Okay, let's go over the next one. The next trade was the earnings trade was Upstart, and for this one we used what's called a Jade Lizard. Now, a Jade Lizard sounds like, oh my goodness, what is this thing now, right? It's simply a combination of calls and puts too. We're selling a put, we're taking in a certain amount of premium, and then we're going to sell a call credit spread. And we're making sure that we take in enough premium so that if price shoots up high, the amount of premium that we take in is more than the width of our call credit spread. So what am I saying? If we sell a put for 90 cents and then we sell a call credit spread for 20 cents, that means we took in $1.10. And so now we can sell a call credit spread for $1 wide, because that's $100. That's $100, right? So if we took in $110 and the price goes through the upside of our trade, we only lose 100 of the 110. So price can go as high as it wants. Price can moon on us, right? And we're still going to make money. We're going to make $10. But that's not what we're shooting for. We're shooting to make, anywhere from 50% and above on premium, but we have no worry to the upside. So it's a worry-free trade on the upside, and on the downside, we took in 110. I'm just using that as an example. If price goes below our short put strike, we've got $1.10 padding before we even. That's our break even. So if we'd sold a $90 put, let's just say, we have until 87.90 until we have to worry about. That's our break even. So it's a great strategy, again, for the right setup. So here are the key parameters for the Upstart trade. Now I kind of did this one a little bit differently. I just put, so each time we're going to be talking about, let's say number 1, I just put the number there where the level is. So you're going to see number 2, there's 3 2s because that's where all these pivots are. But let's see. So we have price right here, by the way. This is the day of earnings, the day we put the trade on, and then here's the day of earnings down here, this big red. Price was very similar, but not exactly. It was similar to the CoreWeave trade in that price was very strong. It was near the upper Bollinger Band, but not above it. It was right near it, but not above it. That suggests that we're in a strong trend. Okay. Number 2, on the upside, I was thinking, well, what happens in case they have good earnings? How high can the price go? Well, number 1, it's going to have to get through pivot number 2 here. But that's not even a big deal because that's so close. That's a no big deal, a no-brainer. But looking to the left, it had another pivot to deal with, which is a couple of dollars higher. And again, I'm just trying to eyeball it. Maybe this was 87, and then this is maybe 93 or something. So another 5 points away, it had another pivot to deal with. And then up here, maybe about 100, 102, it had another pivot to deal with. So it had 3 pivots to kind of deal with if it went to the upside, unless it gaps up. And a lot of times, though, you will see a gap on earnings. They sometimes fill quickly, but if they don't,
Uh-oh. Looks like Jim's froze here. Can you guys still hear me, or are we totally down? Oh, okay. I guess we're going to have to do without slides until Jim gets back online here. If there are any questions that you guys have while we're waiting here, I'd be happy to answer any questions you might have.
Oh, okay. Am I back? Hello?
He's back. Yeah, you're back. You're back.
Yeah, I lost. I don't know what happened. That was a glitch. Let's keep going in case I'm going to lose my cable for some reason. Wow, that's nuts. Did anyone have a question for you, Frank? Sorry.
No.
Okay, good. All right. I think we were on number 4. We had MACD was falling, which just kind of indicates that price was coming off of a recent swing. So it's just, when you have MACD falling like this, it just means that there's been a pivot nearby. Number 5, we had no gaps to worry about. Again, we had no gaps to worry about. And number 6, we had previous support right here. Okay, near, I'm sorry, over here. We had previous support from this area here, okay, which was at some moving average clusters right here. So I kind of felt if price fell, this should be an area where it should catch. And lo and behold, it actually did catch it. First, it caught at the 50-day moving average, and then it caught at the 200-day moving average. Again, right nearby these other areas. Yes, BJ. We have an actual technical analysis channel where I post, Todd posts, Frank posts, other members post technicals that they're looking at on charts. Technical questions can be asked there. Matter of fact, if you have a chart you're looking at and you're wondering what do we see or what do I see in it as far as technicals, you can just put your request in that channel, and we'll give you a chart mapped out on what we see as far as technicals. But what I wanted to say about number 6 was that we were selling right here. We're taking in a good amount of premium, and it buffers the area where we're going to be selling. So let me go into the trade. So this trade, again, is a Jade Lizard, and I'm going to go through the mechanics of it right below. So we sell the 62 put, okay, which is right about here. Okay, again, we're in this. Now, this is where price wound up going to. We don't know where it's going to go, but this is the area where we sold the put based on this cluster area here, okay? Then we sold the 97.98 call credit spread. Now keep in mind, this is a $1 wide call credit spread. So then what does that mean? That means, hang on, I got a cat. That means on the upside, we could potentially lose $100 if price goes above 97 and 98. But look what we took in. We took in $112. So if price goes to $100 on us, 130, 150, whatever, we're going to be able to keep 112 minus 100, which is $12. Now, again, we're not trading for $12, but worst case scenario, price moons on us. We're going to get out of this trade with lunch money. Taco money for the day. Okay, we're not going to get screwed because price went shooting past our strikes. We're still going to make money on it. Now, to the downside, if price goes below 62, we have choices and strategies we can use. Number one, we can roll that 62 put out a week and down in strike, or we can roll it, just roll it out 1 week and give it time to bounce back up, or we can take assignment because at $62. We take away the credit we took in, that would give us a cost basis of about $60.88. So, hey, I'll take this stock at $60.88. It's because it's going to have to fall from where it was, which is up here at about 85. So that's a $20-something drop in price. That's a discount. Okay. So sometimes we don't mind getting assigned. All right. Yeah. So again, I always make sure that you take in at least $1 for this trade, or you don't do the trade. If I get filled at $1.12 and something happens and the price moves, and now it's only showing you that you're going to take in 80 cents, you don't do the trade. only because you're not protected to the upside. But I mean, I got to tell you, 99% of the time, if I get $1.12, you're going to get $1.10 or $1.11, or maybe sometimes $1.15. This time you guys get a better price than me. It's just the way it works. Okay, max profits on this trade is 112. There's no ability to make anything extra on this trade like we did in the CoreWeave trade. It's basically set it and forget it. If it goes to the upside, no big deal. Now, keep in mind, if price does go to the upside but goes to 93, we're good. We're going to probably make 100% on this trade because we'll just let both the call credit spread and the put expire, and we keep it. Now, sometimes people like to close them out next morning. Go right ahead. That's closing out trades is always on you if you want to take that profit because that's your account. Sometimes I do try to milk it for as much as I can, but that's just my mentality. Sometimes I do close them too. It's just so I can close the book and move on. All right. And here's the math. I did it in my head. I didn't have to. So I even give you the cost basis. If we get assigned at 62, I just want you to know, please be okay and size appropriately to your account in case we get assigned. The cost basis is going to be 60.88. Now, if that happens, the way we get out of that trade is we'll look to sell covered calls on it as soon as possible to bring in more premium and just exit the trade. Now, if you really like a trade that you got into on an assignment from something like this, keep it. It's up to you. It's your account. I like to sometimes just get out. This way we can get to flat and look on to the next trade. Don't leave any baggage behind. All right. Any questions here? I guess we'll stop here for a quick set of questions if there are any. So let's just actually look now. We did, like I said, we sold the cash secured put right about here, which was prior support. Okay. We sold the call credit spread up here. And if you look to the left, just above this last pivot. So we had this thing. It's similar to a strangle. Okay. Because you do have something on the bottom end. You have something on the top end. But we're doing a different strategy where if it does go up, we have no worry, no risk. If it goes down, we have some risk. But we're going to get paid if we get assigned, and we actually don't have to take assignment. We can always roll. And if you're not familiar with what rolling is, that's one of the get out of jail card free, if you want to call it that, with options trading. We have ways of getting out of positions that are challenged. It's one of the wonders of options. And once you do a couple of rolls, if you've never done a roll and never got assigned, it sounds scary and it sounds, oh my God, oh my goodness. Sometimes it can be fun because you're actually doing something, it's work, but it has a positive outcome, again, 90+% of the time, sooner or later, and usually sooner, more than later. All right, last trade, and then we'll open up for some in-depth conversation and questions if you have. On Chewy. Now, this is a trade that got away from us in the beginning, but it has a happy ending. Another Jade Lizard, and I'll explain why. So the setup here, and again, it's funny because this was the prior quarter of earnings, and it seems like they were all doing the same thing. We had markets that had been going up strong, pulling back, and then bouncing into basically an area of midway from those moves from down, up to down, and then basically halfway back up. Here is the day of earnings, the gap down, and here's the day that we put the earnings trade on. Again, price is in the upper area of the upper Bollinger Band. Okay, that just means we're in a fairly strong trend. Okay, we had an open gap to worry about. So number 2, we had a gap between this pivot here and this low of this day here. So we did have a gap to worry about. We were above all the major moving averages, number 3, which just indicates to me that this is a strong trend. Now, again, price can do anything, right? Price can keep going or it can fall right through these strong moving averages, which is what it did wind up doing. The RSI, which is another thing I look at, number 4, was very bullish. It was a 64, which means it had a lot of room to go in case it, before it became overbought. Usually 70 and above or 80 and above is what's called overbought, but it was only a 64 leading up to earnings. So it did have room to run up if it wanted to go up. But by all means, if earnings didn't go well, it could fall down to the 30 area, which it almost did because that's where the oversold area comes. If you have a bad earnings report, you'll get you'll get sold off by all the funds, all the day traders, all the shorters, and you'll wind up getting oversold pretty quick. But we also had the MACD, another thing I like to look at, and MACD was positive. So to be honest with you, this trade faked us out, because everything indicated it was strong, and it might not have a great reaction to earnings if they're not good, but not this type of a gap down. And it was a pretty sizable gap down. Now, let's go through where the actual strikes were. So again, the trade is here. So it's a J Lizard, which takes in a cash secured put, 37.5. So we sold that 37.5 right around here, okay, which is right below the 200-day moving average. That's usually a safe area. And you'll see that while price did gap below the 200 within 3 or 4 days, what happened? It got right back above that 200-day moving average, and it stayed there the whole time. Okay, that was where we sold the cash secured put. And then we sold a 47 by 47.5. Now, the reason we only sold a half was because based on this chart, it only made sense to do, and that's where this is. This pivot up here is about 48, but to make this trade work with taking in a good amount of premium where we can do it for that with those strikes, it could only be a $50 wide strike. But still, we were able to put it on and bring in a nice size credit. Now, we took in $51, which had no upside risk. So if price mooned on us, again, we would lose nothing because we had a $50 wide spread to the upside. So we would lose $1. I'm sorry, we would still make $1 because we'd have 51 credit. We'd lose 50. So we would be up $1. So it was basically a scratch trade if price went shooting to the moon. And if it falls, our break even would be 37.50 minus 51, okay, which would be, call it $37, okay? Now, that's what happened though, right? Price did gap down, and it gapped down to about 38 and change, but it fell all the way down to like 35 and change. So we were definitely challenged. So this trade didn't go well in the beginning. And when it came to the end of the week, by the way, we look to get out of these earnings trades in that same expiration week. We don't look to drag these out unless there's a challenge and unless we have to roll it or something. So we did. It got to Friday, and the price was still below our $37 strike, okay? And even with the premium that we took in, it wasn't enough that we could close the 37 for a profit. So what did we do? We rolled the 37 strike, a 37.5 strike. I'm sorry, yeah, we rolled the 37.5 strike out, and we added a call. So here's the trade. This is the trade that we put on at the end of the week because we had to do something because Friday came and we were below 37.5. So we bought to close the one that we had. We sold a week out, 1 week later, the same strike cash secured put, and we added what's called a naked call. What we created there now was a strangle. Now, to do this roll, because price was so far below our 37.5, that costed us money. But by bringing in that extra naked call sell premium, it brought us to a plus 20 credit. So we took in 51 on the initial credit, right? Then we took in 20 to roll and kick the can down the road, if you want to call it that, okay? And I always point this out too. So we rolled this out and added a naked call, creating strangle, to add premium to the campaign to help with the exit plan. And if you look at the chart again, this was about the day that we rolled it here. And then the following week, we got that move we needed. Price moved up strong because the earnings, I don't think they were that terrible, but it was an overreaction. That's what happens a lot of times. On earnings, there's some overreaction. People want out, then people want in, and price bounced beautifully for us. It got back over our strike, okay? And we wound up, and here's what we did. We wound up closing the whole thing in this next slide. We wound up closing it at 61. 61? Yeah. We didn't make a lot, but we still made 14%. And what I'm trying to illustrate is that not every trade is going to kill it, but at least we didn't lose on this trade. By getting out and closing it, we took it off before we were subjected to any difficulty on the upside. Because don't forget, we had that naked call. So as price was getting stronger, right? We closed it in case it decided to moon on us. So while we didn't make a killing on this trade, we didn't lose on it. And that's the most important thing, right? Having more winners than losers. You're not always gonna, pad your pockets on every trade. But hey, I'll take a win of $1 or $50 over a loss of, $50 any day, no matter, a win is a win. That's how I look at it. All right, where are we? So we did that. Does that. And yeah, again, it was 14%. It wasn't a lot of money, but it was something. Now, some of you might be asking, well, what really do you look at? I look at so many different things. That's why if there might be 10 earnings on any given day, we might do 2 or 3 trades. Each day, we usually, in the heart of earnings, we have at least, 2, 3, sometimes 4, depends. Or at least in a week, we sometimes do 10, 15. It depends. It really depends on how many setups that pass the test. But I look at all this stuff. Support and resistance, open interest in the options. Because a lot of times, if big money knows what's going to be going on, and if there is a direction that they're angling toward, I'll use the open interest in making the decision. Gaps, like I talked about already. The short interest, if a stock has a huge short interest, it doesn't take a lot of buying to get that price can get out of control. So I always look at the short interest, the Fibonacci levels, like I mentioned. I'll look at the 52-week high and low, moving averages, like I mentioned before, major trend lines. I look at the past earnings moves. I want to see, hey, the market makers are saying this price could move $10, but has it moved 20 in the past? Could it move 30? Where can this thing go if it gets crazy? So there's a lot. And I guess this might answer some of your questions, BJ. That's how I determine the actual strategy I choose. It has a lot to do with all these things.
I haven't seen any other new questions come up, Jim. Okay.
All right. What does this all mean now? Well, let's look at those numbers again for example, for the trades that we looked at earlier. This is the same trades from earlier. But what does this all mean? Well, the average premium that we take in per earnings trade is anywhere between $60 and $150 for one contract. Now, if you're a larger trader and you do 2 contracts, just double these numbers. If you do 5 or 10 contracts, multiply it by that. But if you do one trade, one contract, we're taking in about $60 to $150 because you saw the alerts. They were as low as maybe 50, 60, and as high as 105, 110, whatever. But there are some that are higher. So up between 60 and 150 is a fair shake, right? We're capturing 88% roughly on average of what we take in. What does that mean? Well, let's just say on average, because again, I could highball this or I can lowball this number. Let's lowball it. Let's say we take in $75 average premium, okay? But we're keeping 88% of that figure each trade. That means we're keeping about $66 per contract. Now, again, you could trade one contract. I'm sure Todd and Frank trade their size contracts, but you guys can chime in if you want. But that's a fair amount, $66 per trade we're keeping when we win, okay? On average, again, some are higher, some are lower. We had 89 winning trades up until now. So if you make $66 per contract and you do one on 89 trades, that's $5,874 using one contract. And that's all in your pocket. And if you do 2 contracts, well, that would have been about $11,000 for the year. And as Todd is saying, yeah, it depends on your account size. So yeah, and you might have 2 accounts, 3 accounts. So you might do 1 contract in one account. Maybe you do 2 contracts in a different account. Or maybe you just want to stick with 1 contract. Either way, your investment is paid for with 1 contract. Now, that one trade out of the 90, because again, we did 90 trades. That one that's still out there is CMG, and we were assigned on CMG, and we've been managing it for about, I don't know, maybe 7 weeks now. So sometimes there's work, right? But it's okay because we've been selling premium not every week, but when it makes sense to sell premium, And that's another conversation. When do you sell the covered calls? When do you sell extra stuff? That all has to do with how's the price action on the stock. You don't want to sell covered calls and sell them to sell them. You don't want to sell them just to sell them. I'm saying you want to sell them when the time is right, so you can get a good amount of premium and not sell them too cheap or too low, where you get what's called run over by selling it below your cost basis. So that's a nuance that is really important. And you learn that along the way when you're in the Discord, but it's something that you pick up along the way. But by all means, we've been managing it, but it's fine because we've been selling covered calls. And again, when you're talking about a stock like Chipotle Mexican Grill, that stock's not going out of business, right? Unless they poison a whole bunch of people with their lettuce or something, right? They're not going out of business. So it's a viable company. It'll come back, and it did. It is, and we're really close to getting out of that break even or a profit. So even if a trade goes completely wrong, and you're in it for a couple of weeks, managing it 6 weeks, whatever, it's manageable, and it's not eating up your whole account. That's why I really don't only recommend you don't go too big in size, because if you had 10 of these contracts and you have a certain size account, well, you're going to be eating up a lot of your portfolio in just this one trade. So with that said, that's that. So again, you can see where if you wanted to give us a try, you could have probably made around $5,800 with one contract for all the trades that we've done. If you did 2 contracts, you can look at where the numbers go. If you did 10 contracts, 10 times this is a nice amount of money. And so Todd is saying that his target is 3 to 5% return a month on his accounts. So yeah, and again, everyone has their own. Some people with $1 million accounts look for 2%, 3%. Sometimes you could have that size account and you're just an aggressive trader. You're looking to make it turn into 10 million, whatever. Aggressive trading is on you. But if you just want to go conservative, one contract, you can see where, when you see what we're going to offer this for, I'm going to offer this for a really, really good deal. If you want to jump on board and try us out, it'll pay for itself. All right. So this is just to illustrate what some of the people that come, Frank and Todd, they've already spoken on the community, but these are some other members who have left some reviews, and these, again, we're 5-star rated. Why? Because we're all transparent. Number one, we're all very transparent. We have a very small, close-knit group. Everybody is straight up. There's no, we don't post memes all day. We don't honk our own horns if we make a great trade. We share our trades and we share our profits. But a lot of great camaraderie. This particular person says that they're very happy. They recommend the service. This person says that, like I just said, we're all transparent. We trades are for all levels of members, beginners, advanced. This person has achieved 90% win rates with us. You can't go wrong. The community is great over here. This guy says he's been experiencing different trade alert services, and he believes that this one is the best. So I don't claim to be the best out there. There's a lot of good Discords, but I think we're probably one of the best out there. Definitely have the best group of people. I mean, our members are really top notch, class A people. I would have them over for dinner pretty much anytime and feel very comfortable.
I have to say, over the years, I've participated in a lot of different groups, and it's Jim's group, the camaraderie that exists and the day-to-day interaction between the members of the group is extremely high quality. I see it as having tremendous value for me personally. I've been trading a long time, but that doesn't make me, the unlimited 100% right every time expert. I post all of my trades out on the channel, and I say when I make mistakes, and I say when I have some good trades. But I get feedback quite often from Jim and from other members of the community where it's kind of not negative in any way, but very positive in, maybe you could have done this, or this might have been a better approach, and that kind of thing, which is extremely valuable, because I think we all sit there sometimes scratching our head saying, did I make the right move, or what caused me to lose money on this particular trade? So to me, it's an invaluable part of being a member.
Yeah, thank you, Frank. I agree. I mean, the community, and again, don't forget, if you do want to come on board and try us out, you're not just getting earnings trades, by the way. Earnings trades are a component of what you'd be getting. You're going to be getting bonus trades. So on top of the earnings trades, there are the other regular trades that some of the other members are going to be getting. You get some of those. You do get the channel that's for technical analysis. You get access to, we have a shared trades channel. I post extra trades there. Frank posts trades there. Todd posts trades there, and these are all winning trades. Like the amount of winning trades in the shared trades channel is huge. So it's not like you just, oh my God, I'm going to be trading earnings and gambling. Again, we took the gamble out, and you're getting. I'm telling you, Frank and Todd and some of the other guys post trades that are 400% or 500% winners. And some of those are directional. So if you like directional trades, I'm going to bring Todd on. If you like directional trades, we've got directional trades go on where you're buying calls or call spreads or even puts and put spreads, and you're spending, let's say, 100 and you're making 400. Todd just posted one today. He took it the other day and he made a 400%. Frank posts 3 to 4 trades a day, and he's taking quick 50%, 100% out. I mean, it's a lot of action. A lot of action. Hey, Todd, how you doing, man?
Hey, good, guys.
Welcome,
I
welcome.
wanted to bring that 112 trade that we had on for SMCI up in this conversation, because if you'll remember, we put that on back in August.
Okay.
All right.
Yeah.
And I know you guys probably closed that out, but I kept rolling this thing.
Oh, that's right. I remember you kept that. That's right. SMCI, you kept it. Right.
Yeah, right. I did. And it just works out well for tonight because that thing's coming off this Friday. And I thought we'd walk through it because it's a real good example of, we put on the trade for earnings. We thought we were going to be in it for 2 days, and it ended up, 2 months?
Yeah. I'll tell you what, you can share your screen if you want to do it on your charts. You have your charts up?
Nah, I do, but I run an external, so it probably won't work.
Okay.
But if you want to put on, just bring up the chart on SMCI, we can go back to the day we put it on. And that was another one like Chewy. I think it fell out of the sky on us, and I think we were scrambling with it. But it's just a great example of how you mitigated trade, and then some of us kind of went off on our own little tangent because we did not oversize. That was the key. I was willing to take the 2 puts and turn them into cash secured puts.
Okay.
That most everybody else closed out with the trade.
Yep. Let me just pull it up. I got to take this one off. You might see blank for a second. Okay, good. There we go. Now I'm going to have to add image file. You guys can talk amongst yourselves if you want while I'm trying to do this.
While you're doing that, I'll just mention that as Jim mentioned earlier, I tend to be heavily leaning toward the conservative side. Risk averse in many ways, but I tend to also be the vast majority of my portfolios, my accounts are in long-term trades. I do a lot of leap trades. I share a lot of those kind of trades on the channel as well. I've been a long time deep researcher. I tend to spend quite a few hours on weekends and nights doing the research that underlies some of the decisions that I make as far as which stocks I'm buying and why I'm buying them. So, the day trades and those kinds of things, that's just to keep me from getting bored most of the time.
Yeah, and Frank is up on all the current events, mainly the rare earth materials right now.
Good point.
That is so valuable to the Discord community because, I mean, I was never really one to be looking into rare earth materials. I didn't follow it. I wasn't chasing everything that was shiny, but I never really would have thought about it. But
Very
it's
true.
it's something that I wasn't going to look at unless Frank would have brought it up. So
Yeah, I mean that's the community, right? So we've got, Todd, you're really, like I said, sometimes you're like a fly on my wall. You're thinking what I'm thinking, or you're looking at something and I'm thinking, and you remind me, and it's good because sometimes I do get scatterbrained. I'm looking at a million things, but
yeah, and that just goes to show you that it's a like-minded community. Like once you learn or want to learn the options selling side of things, like your mind will click and it'll be tied into what everybody else is looking at too. So
right.
it's kind of like one feeds the other, but then it's a herd. It's not just one guy with one idea. Like everybody's kind of seeing the same things moving on.
No doubt.
But if you want to look at that SMSCI trade, it's an interesting one.
Yeah,
We
let me
put
listen
that
more
on
of it.
8/5, August 5th.
So for VJ, if you're still here, I'm not sure if you are, but this is something like along the lines of, let's say, if you were looking at SMCI and you weren't really sure where is support, where is resistance, thinking about getting into a trade, this is something that might show up in the technical analysis channel. Something that's mapped out like this, where you'll see support here, resistance there, and you're moving averages, and you can get an idea of what you might look to do on an entry or an exit.
Right. And that technical analysis channel is very key for a lot of the trades that we put on every day.
Yeah, and it's nice while we're in trades, we're updating what we're seeing and what we're looking at. Because again, we're all looking at, all of us trade our own accounts, and then we trade within the community. So, someone might be looking at a trade that the other guy hasn't been looking at in a few hours or in a day, and you notice the nuances of change going on in the chart, whether it's a 5-minute, 30-minute, hour, whatever the chart you're looking at. And you point it out, you say, wow, this is looking better. This was looking bad, but now it's looking better, or it was looking great, but now it's not looking so great. What are you going to do,
Yeah, right. And we can go back and look at that. I go back in almost daily and go back and search like what were we looking at and why did we put that trade on, and maybe we can do it again.
100%.
Yeah.
And something like this with SMCI is, what leaps out to me is it really respects the 50 until the yellow is the 50-day moving average until it doesn't, right? Breaks it. It really respects the 200, which is the orange, right? Multiple times.
Right.
But yeah, I think we did that trade over here, Todd, because
August 5th. August 5th.
Yep, falls out of the sky. Boom.
Yeah. So the expected move was only $14 and it fell out of the sky. It was 2x the expected move, which is something that I look at. I look at the expected move. It's a place to start thinking of putting on the trade.
Exactly.
A lot of times I like to go 1.5 times the expected move to start looking at the chart. And if that falls into a certain support resistance or one of the DMAs, that's just all these confirmations or reasons, checklists, checkbox, whatever you want to call it, to put on the trade. Right?
100%.
So we got 71 cents. We got 71 cents for that 112 trade, right? Thought we'd have it on for a day or two. And here we are 2 months later. But the process during this last 2 months was, after we had scrambled, we collected the 71 cent credit before the earnings came out. We were scrambling. We ended up selling the put debit spread side of the 112, and we brought in an additional $131 in collected premium. Okay? Nice. So now we had the 71 plus the 131. Couple days later, I then had rolled we had what do we have there? We had the 4650 puts, right? That were in the money. They were 4650s at that time.
Okay, yes. It's coming back to me now. Yep.
Yeah, we had 2 of them, right? I rolled those 4650s out to September 17th, okay, for $255 credit each.
Nice. Yeah,
beautiful roll, right? Still
Yeah.
underwater, but a beautiful roll. Fantastic credit. What is that? That's probably like 5%, 6% at least.
Yeah.
On 9/17, not too long ago,
That's
right? We were still underwater on the
Right here.
46.50s.
That's right here, Todd, right there.
Yep, we were at $44.80. We were still underwater by $1.80, $2, whatever. I rolled it again for $196 each, times
Wow.
2.
We're going to call you now. You're going to be called the milkman, Todd.
I was milking it. I rolled that, 2 of those, right, to the 17th of October, right?
Wow.
And I also rolled down, actually. I rolled from the 46.50 down to 46 and still collected that kind of premium. So I rolled down
Wow.
50
That's huge.
cents and still collected $2 per, right?
Huge premiums in this thing, for sure.
Huge premiums, even after earnings. That's the key here. Even after earnings, if you trade the right stocks, the premiums are good no matter what. They're just extra good when the IV is that high because of earnings, because of the unknown.
Correct.
But this is how we took the unknown and made money. When this comes off, we're at what, $53 today?
Yeah, man. Look at that move you got now. Now you're so far, you've got a cushion like you wouldn't believe.
We got 2 days, 3 days. Right now, I'm marking total credit received on this trade is $1,110.
Wow.
When we only thought we were going to make $71.
See, and that's the good point, because while I talked about what we are keeping on average from just premiums, I'm not talking about the extra profits we have made by selling the extra premium, let's say from rolls, and from selling those embedded put debit spreads, like you mentioned, where you took in an extra maybe 170 a piece, 2 of them. That adds up on top of what we're taking in for premium. And that's a great point, because you built this trade like a pro, like a damn pro.
I mean, it couldn't have been any better. It really couldn't.
And what's nice, this is a semiconductor, right? So you've got, that's also helping out with the premiums. I know you said that there's huge premiums in this stock, and that's because it is a semiconductor. Those semiconductor stocks are gravy.
Right.
If you stay on the right side of them like you did, yeah, this is like you can milk it to the is it the roosters come home? And you can milk it.
Yeah, and
home.
I mean it only makes sense because like all the Mag 10 basically, yeah, we can afford to trade those, but we can only do 1 or 2 contracts. And what are we going to bring in? Maybe 2% a month,
right?
Maybe. Yeah, if you get stuck holding one of those, maybe it's a little better than getting stuck with something like SMCI, but you don't know. You don't know. You
don't know. I agree. And what's nice to note, and just talking about gaps for a moment, I mentioned earlier that gaps, 90+% of them get filled. You can see where we had this huge gap down that Todd mentioned on the earnings, right? Then there were a couple of more gap downs while he was managing it. But look what happens. Gap here, boom, filled. And then this gap here from the earnings that Todd had the not only the balls, the intelligence on how to manage it, because he did this all by himself. We were out of this already. He was managing, I guess, on his own. Look, this gap is now filled. Then you had a gap here and it just filled. So lo and behold, even if a stock gaps away from us on earnings, if you have the fortitude and if you have the proper size management in time, again, as long as it's a good name. And again, we don't trade stocks we usually don't do biotech stocks. We don't do stocks that could crash and burn and wait. They have to wait now 5 years for another drug to come around. So we're doing names that make sense to trade. And if it gets out of control, sit tight, buckle down, hunker down, whatever you call it. Use some management skills that either you have or will help you with. In this case, Todd didn't need any help, and that's great to see where he's managing this thing like a pro. And he's going to take a huge profit at the end of this.
Yeah, it really is. But that's the key to the Discord, though. I mean, guys, I used to trade I paper traded for 8 months, and I've been telling my friends I encourage that, because until you learn the mechanics on how to manage the position, putting on the trade is nothing. Everybody can do that. But what do you do when you're challenged in it? It's not always going to be easy. But the key with the Discord is, trading by yourself is lonely. It's boring, right? But being in the Discord, I put on so many more trades because I kind of had the idea, and you fight with yourself like, yeah, is it good? Is it not good? Maybe it's good. And then you end up getting distracted by something else and you don't put it on. Where with the Discord, you can discuss it, be like, yeah, it's pretty good, like we did today. Like, I like it. Yeah, you like it? Yeah, I like it. So, it's a no-brainer, guys. Like, Uzi, he invited me on. He gave me a week for free. He texts me. He's like, what do you think? I go, I love it. He's like, all right. So anybody who wants to join, Uzi will give you a free membership for a week or whatever. You won't need a discount. You You really won't.
Yeah, you've hit the ground running since you came on. And like I said,
I've been here since June.
Okay, yeah. And you know what? It feels like you've been here longer. But, the thing is that, it's true. Like sometimes, if you're looking at a trade on your own, because everyone wants to do trades on their own. Everyone's got an idea. And then you put it out there and someone said, yeah, I like that. Let's do it. Or, yeah. I mean, like the trade you put on today, I think it was it IBIT? It was IBIT, right?
Yeah, the IBIT,
yeah,
the 112 trade on IBIT.
Yeah.
Because as volatile as this market is, as we all know and are experiencing, maybe we do need that little bit of downside protection, because then if it does drop in there, we size that trade enough that we'll just go ahead and uncover that maybe and take 3 cash secured puts off that.
Yep.
There's so many different ways to manage those trades. Even like I was thinking maybe we should do some more 111s, just to have that extra put on the downside, because
that's a good point. Todd, because so the market structure that we've been having was, I think, for all intents and purposes, I think almost any new trader, even a premium, like a new cash secured put trader, was able probably to make money because you just sell puts, stocks go up, close them, you make money. Now we've got some turbulence. We've got up and down movements going on now. So now, yes, Todd, I agree. Now we're going to be bringing in some of those back pocket strategies that these other Discords, and again, I'm not knocking, I have a lot of good friends that run Discords. I'm in some of them. They have great traders, great moderators, traders, but they're kind of unidirectional. They're like cash you could put guys or, buy a call. So we do everything. So we're ready for whatever the market's going to bring to us with, like what Todd's saying, what Frank is saying, 112s, 111s. There's so many different ways to trade that when the market changes or when the market gets, up and down movement, you can't just keep selling cash puts or just buy calls because it's not going to work the same.
Right. And another good thing about being in Discord is, like, for instance, there's a couple trades that we have on right now that Jim will close. He'll set out the alert that he's closed and he's out of the trade, but the stock will take off within a minute before anybody can get to their computer or put on the trade to close. And there's quite a few of us still stuck in some cash secure or call credit spreads to the upside that we're just getting challenged left and right. So what I like about Discord is Jim never leaves any of us behind. Like, even though he's out, he knows we're still in it, right? And what happens is if we're still in it, we can't take the trades because we're tied up, So it's kind of nice having you to help us, even though you're already out. Like, no trader left behind is Jim's motto, and it's fantastic. So
yeah, thanks, Todd. That's true. I forgot to mention that. No one is left behind. If you want to come on board with us and you have an issue with a trade, I'll even get on a DM with you, on a video DM with you. I can't tell you how many times I've had to do that with members, and I'm fine with that. So that I can help them get through either the order process, getting it in, or getting the order in on their broker, because sometimes it's So not every broker order of execution is the same or as easy as others. So there's some guys that have different ordering systems. I try to help them out. Or if someone doesn't understand the trade and they're trying to comprehend it, instead of tying up, the room and trying to type, which is always harder to sometimes get your point across, I'll just pop on a video call with you and, we'll talk behind the scenes and I'll explain things to you if I have to, or if you need it. So
Absolutely.
I mean, we got a great, it really is. I do think we have something special, and it's a, what do they say? What do they say? It takes a city. Well, I don't know how they say that, but the overall is much greater than any one individual, including myself. So, I'm stronger because I have guys that are intelligent and know how to trade as well, because, I can put the alerts out there and they don't need any hand holding. But if there's a couple that need some hand holding, no worries. I mean, that's what it's all about. Because I'll be honest with you, when I was learning how to trade, we didn't even have trading rooms back then. We didn't have the internet like we have now. So I didn't have anywhere to go. And I wish I did. So now you guys, who are newer, let's say, or even just maybe not new, but not as skilled yet, you have a wealth of resources. This is the best time to be a trader. If you can't make it now, then maybe it's not for you. But I believe everybody can be successful if you just get either in with the right crowd or don't blow yourself up before you find the right crowd. That's
absolutely, absolutely, yeah. And again,
Hey,
I paper traded. It was great. I paper traded it.
Jim, since you have Trading View up, you want to go back and hit Raj's question from earlier about ASML?
Oh, thanks for reminding me.
Take a quick look at that stock.
Yep. Let me get all this stuff off. And do you recall what his question was, Frank? Well, I'll just scroll and take a look.
Basically, he put on a cash secured put today on the 925 cash secured put ASML earnings tomorrow, and he was just curious about your thoughts on it.
So his cash secured put is right around here. So it looks like he sold that right below this recent pivot. That's not a bad idea, sure. The question now, I'm going to have to go into my other screen and look at what Thinkorswim has to say about ASML.
What did you do? The 925?
Yeah.
925.
So it's got a $76 expected move roughly from the Thinkorswim market makers. Is he still here, Frank? Do you know?
I believe so. He was here as of 8:49.
Okay, good. So the downside move, according to the market makers on Thinkorswim, is 907. So that's where they're saying that this could go. So they're saying it could go right to about
there,
a little higher. I mean, I could actually put the numbers in, but let's just, for all intents and purposes, that's about 907 right there.
Yeah.
So they're saying it could go there, Roger. So that gets you into this gap down here. That would concern me. This is a type of a trade where it is a $980 stock. Okay, this could move 50 points if it gets crazy. More, even more. The 50-day moving average is down here at 846. So to think that it wouldn't go, down here on a bad earnings report, is kind of, not really, being responsible. This could get down to the 50-day. Now, I'm not trying to scare you, but this is something you always want to be alerted to is on your chart. Where is that 50-day? Because a lot of stocks at some point like to come back and test their moving averages. Now, I don't have the 20 and the 10 or the 20 on this chart, but
yeah, it's sitting right at the 20. It's sitting right on the 20.
Thank you. So yeah, it's already on the 20-day support. So if it breaks it on bad earnings, you got the gap to fill, and then you're going to hope that it gets caught right around the 50-day, which would be right above another gap. So it looks like you sold a 925. I mean, if we're just going to look at deltas for a second, it looks like you sold a 25 delta on earnings, that's a little aggressive in my opinion. I hope it works for you, but it's something that we probably would not have done that type of a trade.
Yeah, with that gap below, we probably would have not.
Yeah, definitely not. But that's the thing, right? There's all different types of traders. So Roger, if that feels good to you, then that's all that matters. If you have a big account and you get assigned at 925 minus what you took in, it looks like you may have taken in somewhere around 13, 14, maybe 1450. So you took in $1,450, let's say, roughly. I'm just using quotes right now. So you took in 15 points. So 925 minus 15 is 910. You break even. So your break even is 910. But yeah, you should be able to roll it if you had to, or sit it out or take assignment and then just sell premium. But a little aggressive in my opinion.
Yeah. So Jim, what would you have done differently? Would you have, even let's just say you would have put that trade on, would you have done some type of downside protection? Would you have maybe did a Jade Lizard type of setup, or what would you have done?
If I had a gun to my head, I would be selling. I'd sell the 125 and buy, let's say, the 910, and if price falls, I'm selling that 910 for profits. So that's going to add in profits to the overall premium, and then I'll use that premium to roll the 925 out as long as I had to, add a call or a call credit spread, and create a Jade Lizard maybe after earnings, and then start working it from there.
Yeah, nice.
But I would have something to sell on the downside as well to make money in case it falls. So if you're listening out there, what we do sometimes is we'll do a trade where we're putting on a credit spread, like a put credit spread, but we have the intention that if it goes crazy against us, we're not going to manage the put credit spread as a unit. We're going to sell that long-sided put for profits. For all intents and purposes, we're opening up that spread. It's going to increase your buying power, but it's going to increase your potential for profit and overall profit in working the trade. So, like I said, there's so many ways that we have with option strategies to make a trade, help a trade get to profits, or if nothing else, break even.
Right, and that's the key. Don't oversize the trade, because if you don't have the buying power or the way to transfer the funds, your only option is to take the loss.
Exactly. And when these brokers call you, when margin call, when that phone rings and it's the margin department, they usually want it that day, 2 days, 3 days tops. Yeah. You got to spend that $25 to wire that money in. And now you're talking about unpleasant trading. It's just, that's not a way to trade. So, yeah. But again, now, Roger, I don't know, and I'm not trying to single you out in this trade, but, we all have different mentalities. We all have different account sizes. Roger might be a millionaire. So in his case, hey, this might not be a big deal if it drops so low because he wants to own this stock and average down dollar cost average. Todd, me, and Frank, we're more like in the sense of, hey, we don't want to have to manage this too long if it goes against us, and we don't, necessarily have $5 million accounts. So we want to keep ourselves liquid and not stressed. This would be a stressful trade if it goes against you. And trading alone is stressful when they, when they kind of get a little crazy. So, yeah.
Right. Yeah. And again, going back to that SMCI earnings trade we did, I've never owned SMCI stock. Never owned it.
Isn't that beautiful? You're making money, and a lot of money on a stock, and you haven't even owned the shares, which is
never. $1,100, $1,100. What, in 2 months? 2 months?
Yeah. And when, you can't even, like, people on the street don't understand what this even means. Like they can't comprehend this. And I know of people that try to teach all of their friends how to trade. And I know people that, and I kind of fall in the middle. Like, if everybody learns how to do this, then we wouldn't be able to do what we do because we're the elite, right? We're the elite. We're able to do this from our homes and make an income that is as much or more than some people make going to a 9-to-5. And I respect, believe me, I've worked my butt off in my life, and I'm sure both Frankie, you have, and Ty, you have too. We've earned everything we have that puts us in the position we're in to do what we do. But I certainly don't want my neighbors doing this, because if everyone's doing it and making money, then it's not going to work. It's not going to work.
Right.
But
Well, what do you think, Jim? Should we get back to the finish up the presentation?
yes, thank you for getting me back on track, Frank. Because while this was a great thank you, and thanks, Todd, for going over this, because this is a trade that I know you've been handling on your own, and I didn't know where you sat with the numbers, but this is you killed it on this trade. So I'm very happy to hear this.
Sure.
That's what it's all about. And stay on what I say, but I'm just saying that's what this is all about. Is you came in with a skill set. You've probably learned a few extra skill sets, and you look what you managed this thing into a four-figure profit.
Oh, I've learned exponentially since I've been on. I mean,
Glad to hear it, man. And I still learn, guys. I still learn something every so often, and from guys that are in the group. I mean, just from talking to some people, sometimes I learn something that, hey, I never knew that, or I never thought of it that way. So it's not like I know everything. I'm still learning, and in this business, if you think you're not going to keep learning, you're crazy, because there's something to learn pretty much every day if you look. And
once you learn, there is no going back. You will do this for the rest of your life. You will.
Yeah, it's almost like getting bit by that by that bug or whatever you want to call it that you can't get out of your system. So here's what I'm offering. If you guys would like to try to come on board with us tonight, it's a great deal. Now, again, I think it's a great deal, but you're gonna have to check it out for yourself to see. But here's what you're gonna get. You get all the earnings trades that we do, right? Up to 10 a week, sometimes more, sometimes less. It's going to be about 2 to 4 bonus trades a week. Okay,
hey,
so that means
Jim,
extra trades.
Your slide's not showing on the screen.
Oh, okay. There it is. Thanks.
There you go.
So you're going to get, as a member, if you come on board, and again, if it's not for you, you're only going to be there 30 days and you can, check out. But if you want to stay with us, you're going to get 10 earnings trades roughly a week. Maybe more, maybe less, depends. If it doesn't pass the test, we don't do a trade, and we're fine by that because there's extra trades you get during the week. You get the technical analysis channel. You get the extra trades from some of the other members. Like I said, Todd, Frank. There's a couple of other guys that put some great trades out there. There's no shortage of trades, that's for sure. And you get to learn in the technical channel, technical analysis, even in the regular trading room talking. People have questions. You post a question or you post an observance. Or you'll see something posted and you'll be, holy cow, I can't believe now I understand that. So it really is good. Every week there's a spreadsheet that shows what we did for the week. I do it every Saturday or Sunday. And I keep saying this, I haven't done it yet. We're going to have some, group Zoom meetings here and there, but just, bantering and talking about stuff. We haven't started that yet. It's just been so busy. I mean, the market's kept us busy. But the regular price is $79. If you join tonight, it's $59 a month. If you want to join for the year, it's $5.99. Like Todd said before, one trade should really cover you for the month.
It will. It will. If you participate one time a month, it will cover your membership.
Yeah, and going back to the numbers, 89 out of 90. If you did one contract and we're averaging $66, I think that's what the number was. Keeping that. So one trade, like Todd said, should do it. And if you do more, that's up to you.
You will. You will do more than one trade a day. You will. Yeah. Even if you're not a full-time trader, even if you work a full-time job, guaranteed you can still be a member of the Discord and make a very nice supplemental paycheck.
I think so, and I know so. You guys think so too. I mean, the best part about it is if we all want our trades to go easy, right? But like everything in life, you don't really learn anything when you're in something that's easy peasy. You don't learn. But what gets interesting is when something gets a little bit challenged, let's say. So that's when you really start to kick in. Now your senses start to wake up and you learn. Now you can learn without getting into trouble. I'm not saying you have to get into bad trades to learn, but what's nice is if the trades are challenged, you got an army of us in the group that are management trained now, and we're going to get our way out of this thing. Like we're all in this. It's like really, I hate to say this, and I no disrespect to any veterans, but it's like we're in that boot camp together, or we're in some type of a war zone, and we're fighting for our lives with money.
Yeah, absolutely. Yeah, and it happens. It's going to happen every couple of days. There's going to be a trade that might be a little sketchy. and we might all come on, and not everyone's panicked, but Jim will already know that we're thinking about it, and he will post, guys, this is what we're going to do. Hang tight. Let's see what's going to happen around 2 or 3 o'clock today, and we're going to make a decision one way or the other. We're going to take care of it. We're going to manage it. And I don't think we've had we were close on a couple, but I don't think we've had any bad experiences since I've been part of the Discord. I don't think so.
No, and thanks for saying that. I didn't solicit that, but you're right. The only one that's still got us by the short hairs is CMG, but we're almost out of that. I think our break even is like 43.40, and the price today is over 42. So, we'll be having tacos for dinner one day this week or next week, hopefully. Because I do.
And here again, it's a great stock. I love CMG.
It's a great stock, and I do want to try to get out before their next earnings, which is coming up. I don't really want to hold this position going into earnings. So I'm looking to get out of this thing maybe this week or next, and then we'll be flat on it, and then we'll close the book on this one. But like Todd said, this is the worst that it got for this year so far. And by all means, there's really nothing else has gone crazy or against us. So we've been blessed, and we've been really good with the selections and management. And again, I love to hear the story. I'm going to say it one more time, and that's it. I love to hear the story that behind the scenes, because I do so much that I do lose track. I knew Todd was in the SNCI I didn't realize where it is, and that's just
right. That's why I was excited to tell you guys this tonight, because I was going to tell you tomorrow or Thursday. I'm holding it to the end now.
Good for you, man. Good for you.
Just because, just to show you that you take what you thought was going to be $71 and turn it into $1,110.
Yeah, that's the beauty of this business, and it almost is like Forrest Gump said, it's a box of chocolates. You never know what you're going to get.
Right, you don't.
We've gotten into some trades. Matter of fact, one more, and then I'll ask leave it for questions if not. So we got into a trade. LAES is the symbol.
Right.
We were looking great in this thing. The chart was looking great, and then we had Friday massive selling going on. So I kind of liquidated a lot of positions. LAES was one of them. And Todd held on to his, or you had a different trade going on. I'm not sure.
No, I never took the put side. I just bought calls.
Oh, you bought calls. Okay.
It was only 5 contracts. So I don't know. I spent like $150. I don't know. It was like
and you sold it today for how much?
Yeah. Liquidated everything today. Net profit was $860 some, $865.
Yeah. And you posted that trade in the Show Your Trades channel, I think. Yeah. So again, this is, great trading. And Frank too. Frank opens and closes probably 3 a day. And his win rate is high, huge, super high. You're in the 90s, Frank. 98, almost 98%, right?
I don't know about that, but I do have a significant percentage. This year has been really good to me for sure. Mr. Market really delivered some nice returns for me.
And did you say you're managing 4 accounts, I think, or 3? It's
four accounts. Yeah.
Yeah. So even if someone has a full-time job, like Todd said before, though, if you have a full-time job, you can set alerts with the Discord. You can set alerts for certain channels to only hear those alerts.
Absolutely. And
Yeah.
if you're a long-term investor, that's great. We all have long-term accounts. I do. The account that I use when I trade with Discord is just a pure trading account. It's
Nice.
not a small account. It's not $1 million account, but it's money that, I'm willing to trade on a day-to-day basis. So anybody just wanting to start out with options, just open an account for maybe $5,000. You can start selling options and make a nice supplemental income. You really can.
Yeah, and that's true. And what's going on too behind the scenes with the SEC, I believe that they're trying to change the day trading pattern day trading law.
$2,000. It's $2,000 now.
Did they actually change it yet? Yeah.
Well, I don't know.
It's coming.
I don't think they've changed it yet, but it looks real good for that to happen.
I
agree. That's
agree.
only going to bring more people to the market, so it's a smart move.
Definitely.
Yeah, for sure.
Yeah, because
I know in the beginning when I started and I was under 25,000, I took some losses because I couldn't close the trade.
Right, because you'd be flagged, right? You would have gotten
Yeah.
flagged.
Yeah. And that was a mistake, a learning curve in its own. I shouldn't have been doing that. But maybe we've all done it. I don't know. But
Yeah.
that was another reason why I held onto some positions that I took some bigger losses on than I would have because I couldn't close. Because of the pattern day trading rule, because I was afraid that I wouldn't be able to trade for 3 days. Like, it's silly. It was silly.
I totally agree. And they should have done this a long time ago, but at least they're doing it. They're doing it now, and it's no better time because the market's still got great movement. And if we, like I said before, if we do get up and down movements now, there'll even be more opportunities. Is there some days that we've had to sit back and just waited for something to materialize and set up because there's been just one direction. It's been slow grinding up.
Right. And like you said, you don't put on trades every day just to put on trades. We only put on trades when they make sense. And like I said in the chat, if I'm not getting 3 to 5% on my money, I don't put the trade on.
That's a great policy. It's a great.
If you just stay patient, like you see some of my trades, I get 7-10% and book it. Yes, most of it's gross, but at the end of the month, like that I posted for the month of September, I've only given back $1,500 of that. You know what I mean?
That was a huge month you had. Yeah, that was huge.
It was the biggest month I've ever had. Biggest month. So.
And Frank, you just came off your biggest like week or something, or month, right?
Yeah.
I mean,
I had a great week last week. I rolled up a couple of call options that I've held for quite some time, and that really helped to boost that weekly total last week.
One last note, and then I'll kind of hang it up though. So we sometimes get assigned, right? I'm not going to make believe we don't get assigned at times, and when we don't think we're going to get assigned. So this past week, Todd and Frank know this. I'm just telling you, the audience. This past week, I had a good number of cash secured puts out on Robinhood, HOOD, and I didn't close them Friday because price was at like 139, and I had 138 strike puts, thinking I'm good. They're going to expire worthless, right? Well, in the aftermarket Friday, the market fell apart. I mean, if you don't know by now, you probably haven't really been paying attention, but the market and Bitcoin collapsed in the after hours. And so price fell down to like 131 or something in the aftermarkets on the hood. And I got assigned, even though I had a 138 strike, and even though by 8 o'clock at night, the price of hood was back over 139, because it fell down to 131, somewhere in option land, they called their broker and said, I want to exercise my puts. So I got assigned at 138, but it took in $1.20 per contract. So my cost was like 136.80. And I sold the stock on Sunday night at 10 o'clock at night when everything was gapping up on the futures on Sunday night, when everything opened up at about 10 o'clock or so. I said, you know what? The stock price is at 144, 145, 146. I got 7,000 in profit here. So I sold all 900 shares within about an hour and netted about $7,400. And again, this is not something I'm saying you're going to, get lucky to be, but sometimes when you get assigned on something, it's not the end of the world. And you might even make a little extra something on it.
Right. 100%. Yeah.
You guys got assigned.
We all made money Sunday night. Yeah, we did.
Yeah, Todd got assigned to Frank. I don't know about you. I didn't get assigned, but
no, I wasn't in it. I didn't get into it.
Yeah, same story with Todd and SMR. He got assigned Monday morning or Monday. When did you sell it? Sunday night?
I set a good till canceled extended hours order before I went to bed at $42. I think I turned my phone off at night because of the alerts, So when I turn my phone on in the morning, it executed at 4:02 a.m. So
right when the market opened up, probably at 4 o'clock in the morning.
Yeah, right. But for hindsight, it ran to $45, 47, 48. But hey, like you said, that was a $500 gift over the weekend when the market was closed. Why not just take it off? I mean, that's never happened to me. It's never happened.
No, me either with this. No,
I've never seen it happen either.
Right. So you got to take it off. I mean,
Totally, because you never know. Hey, the market could have actually gapped lower Sunday night and into Monday morning. We could have been underwater on these assignments, but it
right.
worked
And
out.
yeah, and you know, also too, guys, that's the part about Discord and options selling. Like in the past, I used to hold a position, thinking it's just going to keep going higher, 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 and I would never sell it. And the thing would come crashing back down, and I'd be so pissed off at myself because I didn't sell. The reason I love option selling is because now I sell covered calls. And if it makes sense to let them get called away, I don't have to make that decision. I just let them get called away. I return back to cash, go back on the other side, sell cash secured puts, 3 to 5% a month, hits the criteria. I let it fly. Simple as that. And I've made more money by selling covered calls than just hodling the stock. Hands down. Hands down.
Rinse and repeat.
Absolutely. Keep your long term in the indices, you know. But in this trading account, I really don't want to own shares. I really don't. I'd rather just calls and puts. Whatever side we're on, as long as it makes sense, just keep building. And it is working, you know.
Yeah.
It is working. So
Yeah, and
Yeah,
you know
from
what's working? I'm sorry, go ahead, Frank.
Yeah, I was going to say, from my perspective, even in my long-term holdings accounts, when I'm buying stock, I rarely buy the shares if options are available. The only time I actually buy the stock is when there's no options available, and I got to go with the stock.
right.
Yeah, that's a good way to do it. And sometimes it is cheaper to, because we know stock costs money, right? Much more than the options. So it is sometimes the way to go is with the options. It's just, you want to make sure you're buying the right strike, giving yourself enough time. Maybe sometimes you go in the money, close to the money instead of out of the money. But, that you learn along the way. And, as you get more experience under your belt, you learn where to go when you want to actually get long a stock, but don't want to actually lay out the money to buy the stock, because you don't have to buy the stock at all.
Right.
Yeah, absolutely. Right. So it's more efficient. It's more efficient with your buying power. 100%.
All right, guys. Thank you for for sharing your stories and for sharing your trading profits and wisdom.
Yep, absolutely.
From the crowd, anybody that's still watching, have any questions? Yes, we do zebras. Yep. Black Mamba, we do. That's one of it was one of my favorites for a couple of weeks. We were doing a lot of them. It just depends on the setup and the stock. And we do zebras. Yep. I didn't have any zebra examples in the earnings trades that we went over tonight, but
we'll do a lot of Jade Lizards probably for earnings.
Yeah.
The Jade Lizard works well. Yeah. I don't want to be naked on the call side, so I will do the call credit spread.
Yep.
Instead of the strangle for earnings, Yeah,
that's why the Jade Lizard is perfect for that, man. You protect the upside.
Yeah.
But Black Mamba, see, the zebra is great if you're getting, let's say, a stock that's down low, and now we want to start to take it directionally and we want to go long. We don't want to buy the shares, but we want to have long exposure. Maybe you get to 95 or even 98 delta. We'll use that zebra call strategy. We do it a lot, though. We've done it a lot, and I love it. Yeah.
And it's been successful. The zebra has been successful. Absolutely.
Yep. Definitely. We haven't had any losses with that.
No. And also the risk reversals, like we were saying with the LAES, when that comes back down, we might want to go farther dated with something like that.
Yeah, I do like the prospects for that name. The chart looks like it wants to rip up over time, and it's cheap. I mean, I don't know PE on it or anything, but I know it's cheap compared to where some of these other stocks that have run up, unreasonably pricing wise.
Right.
So I think we're getting it at a deal once it comes down to earth a little bit.
Right.
A nice little cool off period.
Right.
Yeah, I think one of the services or the trades alerts that you put out, the ones that I tend to really like are your spec trades, where you're kind of, they're perhaps a little bit riskier trades, but you typically have good rational reasons for getting into those trades. And if they hit, they can hit really big. So I like those kind of trades. I also like the unusual options activity trades,
Right.
where you've got heavy put or call buying, and you can directionally look at playing a stock up or down.
Right.
Right. Yeah, I agree. Now keep in mind, if you're listening to and you're watching this presentation, right? What Frank and Todd just mentioned, they're not part of this package. But if you want to come on board and try out this package here, and then you say, wait a second, you guys are trading unusual optional activity, or you're doing all these extra trades, you can bump up your membership, and then you can be a full member like Todd and Frank are. They're at the highest level membership that there is, so they get access to everything. But with this package, if you're going to get a lot, you're going to get plenty. But if you want to start doing some unusual options trading, those are nice. Those are a lot of fun. They're nice. We've taken a couple of losses on those throughout the last 6 months or so, but we've made more than we've lost for sure.
Yeah, and they were minimal losses.
Right.
Minimal.
Yeah. But I'm definitely not going to claim we didn't have any losses. We had a couple of losses there, and but we try to get out of them quick if we can. I mean, but you never know with unusual option activity. That could be the one where you're about to close it, and then you don't, and you're happy you didn't, because that's when it rocks.
You mean like Path that I took the loss on, a $14 loss?
Yeah.
I took a $14 loss.
And then they get bought. Wait, no. Or Tech gets bought out. I sell a covered call below cost basis, and then they get bought out. You can't make this stuff up.
Here again, I mean, I sized it for 0, so either way, was no big deal.
I'm like setting unusual structures, taking risk, paying. I'm not sure I followed that, Black Mamba. I like setting unusual structures, taking risk, paying 0. Oh, okay. Yeah. So when we do an unusual options activity trade, 90% of the time, I'd have to say, maybe I'm a little off on that, we're not really paying for it. We're usually selling something to pay for it. But if it doesn't make sense to sell something to pay for it, we'll buy it. Like today, we got Plug. We got into Plug. We just said, you know what? It didn't make sense to sell the puts on it because I forget why. I'll have to look at the chart again. But it just made sense to jump in the long calls. It's a win or lose type trade. But the chart looks good. It's not overbought yet. Some large trades hit the tape, so we got in on that. And just like the other trades, I never recommend buying $5,000 worth of calls. You buy yourself a handful of calls, spend $500, $300, $200, whatever your trade strategy is or your account can handle. Just and plan for it to go to 0. And then if you win, if it's a winning trade, maybe you double your money, maybe you triple your money, or maybe you make 50%, but you made something, but you didn't have to lose sleep over the trade.
Right, 100%, absolutely. And being challenged in these positions, we're taking 2 or 3 contracts with futures. By being challenged in those, gives you the education that, maybe I can ramp it up a little bit. I have plenty of buying power, but if I'm not comfortable, then there's no reason to add more contracts. But being challenged a little bit actually gives you the feeling of being comfortable when you're uncomfortable. And that is something I really did learn from Jim and the Discord, because I wasn't trading futures before I joined. So.
Yeah, and that's another aspect to the group I didn't really mention either. We trade options on futures. So if you're a futures trader and you want to trade options on futures with us, that's the highest level package. That's not this one, but we can talk about getting you into that at a later date. But what's nice about futures options is they do have more risk in the sense of, it has what's called span margin. So you're subjected to a change in the buying power usage in case price does move toward one of your strikes if you're short. But you can usually get away with selling a much lower and further away strike, lower delta, and take in the same or more premium as you would for a stock. So it's basically more premium for lower risk delta. So it's a nice you kind of can set it and forget it as long as you don't go too high in your deltas.
Right.
Because then it can get a little hairy and
Sure. Yeah, and it takes management. I mean, almost everything takes management. Almost everything.
Yeah, definitely. But what's nice though is futures approval is it's given out pretty much like water now. You just got to answer the questions properly and tell them you've got some experience, and they'll give you the futures approval. And then if you have a good broker, you can trade futures. Futures options with them. Yep. So there's a lot there's a lot to do, and depends on what you really want to do, though. If you just want to start and get your feet wet.
Yeah, but being a part of the Discord is a must. Definitely.
Yeah, and even if it's not our Discord, get yourself into a Discord. But I do say, look, give us a try at least, even if you're somewhere else. Give us a shot, because we're doing trades that nobody else is doing. Yeah, there's a lot of traders out there in Discords and a lot of Discords, but they just, they, like I said, they buy calls and they sell puts. That's great. But what do you do when the market is not that type of a market? What are you going to do? So
Absolutely. Right.
all right, guys, have a good night. I'm getting long in the tooth, if you want to call.
Right on. All right. We'll see you in the morning.
Todd, thanks for being here tonight. Frank, thank you for being here tonight. Again, let's do it tomorrow morning. We'll see what market we get, and we'll go from there. Black Mamba, I left the links out there. If you guys have any questions, you can hit me up on Twitter, or you can post a question here now. Otherwise, I put the links out there. If I'll put the links, I'll actually add the links in the description of the YouTube. I can always add that in now after it's over. So because there'll be a recording if someone will come to watch it. The links to getting into the Discord will be in there. So you can pick which one you might want to try out and give us a shot. You've got nothing to lose.
No, absolutely not. Give it a shot.
All right. Good night, guys. I'll see you guys in the morning.
Good night.
Sleep well, guys.